Hey everyone, I'm Mark Goucher, and welcome to another video of Simplicity Investment Watch. Today is Tuesday, February 25th, 2025. First, our disclosure. Okay, we do not give financial advice, and this information is not for investment decisions. This is for educational purposes. The stock market is risky, and any trade or investment is expected to have some or total loss. The use of derivatives increases investment risk or potential loss. Do your own research before any trade. Please consult a financial advisor or professional to determine what is a suitable investment profile for you given your investment goals and objectives. Okay, so let's take a look at the major indexes. Flat out, there's just a lot of uncertainty out there, and markets and traders hate uncertainty. Economic news that's come out, tariffs, just various news, and quite frankly, there always comes these times where traders or people are just trying to find a reason to be pessimistic, maybe about things. But that said, there are some uncertain factors, and when you're placing trades, you like to do the math and know what the risks are, and when some uncertainty comes into the equation, that math is not as clear. So you get basically what's happening lately, which is this area right in here. All right, so this is SPY that we're looking at right now. The ETF for the S&P 500, roughly about a year. And I've thrown on here the Fibonacci retracement numbers for the wave starting back here on early February, this wave up. Basically, it's a healthy retracement, taking it down to, it actually came down here and touched the 100 line, so 100 back to a full retracement for what the February 3rd low was. But the today it found buyers when it hit that point, so that was the 590 on SPY, 590. It found buyers, and you can see the shadow of this candle right down below here. Just tells you that it came down, buyers stepped in, it got pushed up. That's a good candle. That's a good sign. I'm not saying it's over. I'm just saying that the buyers are stepping in. And this retracement, and you'll see this with other stocks that I'm going to show that are on the bull list and my bear list. They all have a very similar picture right now, where there's this basically since February 20th, which is just last week. There's just been just down, 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 and some of them have been going down longer than that. But in any case, this is actually a healthy. I'll spin the positive on it. A healthy retracement and creating some buying opportunities. Now, SPY. So my Lucky 13 score, which is my technical score, proprietary, and the last video I put up was about 2 weeks ago, and SPY scored a 14. So this, just to kind of refresh, or if you didn't see that video, the Lucky 13 score is 0 to 18, with 9 being in the middle, 9 being neutral. Anything higher than 9 is bullish, and obviously getting to the 18 is extremely bullish, and anything lower than 9 is bearish. Getting down to the 0 is extremely bearish. A couple weeks ago, SPY was at 14, on the bullish side, and today it scores a 7, so it's on the bearish side. And let's now take a look at QQQ. Hold on one second. All right. So the NASDAQ 100, similar, right? Four red candles down. The retracement, the Fibonacci retracement numbers are in here. The 382 and the 618 are healthy retracements. The this goes back, this low here where the this zone that I'm measuring right now goes back to November 15, and the high is for December 16. And I put anchored VWAPs off of those numbers as well. So what basically what's going on here with the with QQQ is, as you can see, there's a lot of sideways action going here. It came up and tested this upper limit again, so you kind of have a double top, something to watch for. But in any case, it's right now it came down to the 618 level, and just like on SPY, there's a shadow underneath. So it found support. Buyer stepped in and pushed it back up before the end of the day. Another encouraging sign. Now, QQQ, like SPY, I mean, two weeks ago, QQQ was a 15 on a 0.18 scale, so it was bullish. And just like SPY, it is now a 7. So it's on the bearish side. And then the last one to look at is DIA, which is the Dow Jones Industrial ETF. This latest movement is being measured from this low on November 19 to the high on December 4th. DIA retraced all the way past the 100 level, total retracement, and then found some strength, found some buyers, came back up and almost retested the high. So it's another situation where it almost looks like a double top. And right now it's sitting. We have a couple of green candles for DIA, which is really good. But it did sink down below the 618 level. Now DIA, just like the other ones, lo and behold, is coming at 7. So we got all 7s today. But 2 weeks ago it was at 11. So it was technically speaking, it was the weakest even 2 weeks ago. And now everything else is pretty much in par. There are 7s. Everything's a 7, slightly bearish all across the board for these 3 major indexes. All right, let's take a look at the major economic news coming up for the balance of the week. Or even let's just start with even today's numbers. This number right here, this consumer confidence seemed to kind of spook the markets a little. That's a real low reading. And obviously it was forecast to be 102, and it's previously 104, and it comes in at 98.3. So consumers obviously drive the economy, and when they don't have confidence, this caused just added to that uncertainty that I talked about back at the beginning. For to, the really the only major economic news is on Thursday, is basically what you see in red. And by the way, this is courtesy, or I get this from forexfactory.com, so credit to them. But these red ones are the ones that are going to be the most influential for the week. The gold is meaningful. I mean, new home sales and crude oil inventories, all this is all meaningful. But the real numbers to focus on for the rest of the week is going to be on Thursday morning, 8:30. Preliminary GDP numbers coming out, and unemployment claims come out just like they do every week. And then finally on Friday, Friday's a pretty big one. 8:30 a.m. on Friday, the core personal consumption expenditure index. It's kind of like the CPI, but it's really committed to or dedicated to the consumer. It is the favorite of the Fed to see or watch. This is what they really look at to determine what the inflation in the economy. I mean, obviously there's other things they look at, but this is one of their favorite and leading indicators to look at. So that could be influential on Friday. Just something to pay attention to. And on what's not on here, and it's not macroeconomic news, but Nvidia, one of the most followed and watched stocks out there, is going to report earnings tomorrow, the 26th, Wednesday, the 26th, after the market close. So that's something to watch for, because it does have a significant impact on the total market, and there'll be a lot of eyes on that. All right, here's my bull list and my bear list. And I'll say right out of the gate that nothing on the bull list, you do not want to jump into something right now. I have them in yellow for basically they're on hold. I mean, and I'll show you on some of the charts the story behind these. But as I kind of alluded to or mentioned when I was talking about the major markets, all of these came out of TTM, which is that indicator that I look at for that pattern of finding stocks that are in some consolidation pattern. Typically, they're in an uptrend. They consolidate, and then they excuse me, then they pop or fire, as officially said for the TTM, and move. And hopefully, is what you're able to participate in that next leg up. Um, all of these, since they popped, have just basically come down with the tide of the market. The tide is going out. All the ships are going with it. And so there's really nothing that I'm looking at right now that I would want to jump in. I'm watching them closely because, as I said earlier, there are buying opportunities being created. I'll show that in some of the other charts. But for now, everything is in yellow on hold for covered calls or any other bullish strategy. But these are the ones I'm watching very closely because I'm looking for the opportunity to get back into them or get into them. On the bearish side, well, it stands to reason the market's really not really bearish, but bearish right now. I'm scoring sevens on them, and I have three stocks that are absolutely ready to go, and you can action them on the bearish side of things. So I'll show some the prices of some puts that are available. That's a without shorting the stock. The other way to kind of participate in that downtrend is basically with puts. You could do a vertical spread where you sell a put, buy a put, and then sell a put a little further down to help you pay for that put. You are limiting your gains by doing that because that other put that you sold that further down, but um, that's one way to kind of take advantage of a bearish market or with bearish stocks, or outright just buy the put, which I'll talk about in another minute here when I show you the pricing on some puts. All right, why don't I show you that pricing now? So yeah, the three stocks I had on the bearish list is Applied Material, First Solar, FSLR, and MicroStrategy, MSTR. Now, looking things up on the put side is really, pretty basic. You just go into any options chain and find your puts. Now, typically you're going to want, if you're going to go ahead and implement a put strategy, like if I'm going to do any of these, let's just take like AMAT for example. AMAT closed at 165 today. This is telling me that I can buy a 165 put. So as long as this continues to move below 165, I can make money on that put. I can buy that 165 put for 11.45, and it would cost because there are increments of 100, that's going to cost me $1,145. I try to find the ones that are actually closer with this is the delta column. And I apologize, I didn't have the header on this. I just realized that. But in any case, this column right here are your deltas. If you're interested in a put strategy, my suggestion is you look for a delta that's in the 60s. They're negative because they're puts, but you look at it for it in the 60s. That basically has a 68% chance of being in the money, which is what you want when you're buying the put, and a 30% chance. It's basically almost a 70-30 split. 70% chance of being in roughly, and 30% chance of being out of the money. And you want this to end up in the money because that's how you're going to make your money if you're going long a put. So So let's just say we're talking about that one. So basically what I'm saying is if it's at 165, go buy a 180 put. Now the 180 put is already $15 in the money. So there's got to be at least $15 in the price of that option that counts for how much you're in the money already. You automatically have $15 of value to that because the market's at 165 and you can you can pick it, you can buy it at the market at 165 and put it to somebody at 180. That's basically what the put allows you to do. It's a contract that you can, someone has to take it from you at that price. Someone on the other side wrote that contract saying, I promise, I'm obligated to buy that from you for 180. So you already have $15 of value in there. That's why when you look at the option price, it's $20. And times 100, because options are in hundreds, it's $2,020 to buy that put. But here's the thing. You basically have built-in, you have a little bit of a built-in buffer because of that $15 value, right? That means that AMAC can still go up, 165, 170, 175, and you're still in the money. And that's why I kind of, it's one of the reasons, not the only, but one of the reasons why I'm looking at those 60 delta puts if I want to go long a put. So in any case, these are them. You can look them up, but that's basically what you want to kind of look at. You want it. It's fine if you want to get it at the money. They're going to be less expensive at the money, um, but and this one's even a little bit out of the money. But you'll save money on the premium closer you get to at the money level. But you also want to build in a little bit of a buffer, and that's that price. So let's just take this down to First Solar and do the same thing, right? All right, where's my 60? Right here. I got a 260. So First Solar is closed today at 147.46. I can buy the 170 put. That's already in the money, and by a good 23 bucks, right? So, or 22 bucks roughly, if depending on how, to do all the math. But so you're in the money, as I just said with the other one. So you're gonna have at least that baked into the premium. So your premium's 3070 times 100 is $3,070. You own that put. Now, as long as First Solar, and I'll show you a chart of First Solar, which has just been an ugly picture, as long as First Solar keeps going down. It just came out of TTM squeeze to the downside, perpetuating its downtrend. Yeah, you buy it, and as long as that keeps moving down, obviously the objective is to make money on the put. Okay, enough on this. You can look up these, but that's just a little guide as to what you may want to be looking for. It's personally your choice. You can go at the money, and you can move anywhere up the scale and just kind of get a cheaper option if you want. But that what I look for, as I already explained, is somewhere in that 60 delta range. Okay, let's show a little bit about what I was talking about with how all these stocks that are on this on that bull list, they are all going through similar Fibonacci retracements that the retracements that are similar to what I showed you in the major market SPY and what have you. So here's Airbnb on the list, right? It popped somewhere back here, which was on the earnings. So it came out of TTM. It beat earnings. It beat revenue. It was a great report, and it popped. But as soon as it popped, all this uncertainty baked in, and now we have this 1, 2, 3, 4, 5, whatever candles just all the way down. And I mentioned before in other videos, these things will try to fill the gap. It created a gap when it jumped here. Well, what did it just do? It just filled that gap. So there's multiple reasons why. Plus on a retracement scale, it's at the 618 level on the Fibonacci number, and it seems to be finding a little bit of support there. So what I want to see is I want to see a green candle, or maybe even 2 days of green candles following this to show me that that 618 was truly a support level, which I suspect it's going to be. I mean, I could be wrong. That's fine, but I'm not going to place a trade or a bet, if you will, on the fact that I think this 618 is probably going to be support. You know, it did fill the gap. I'm going to wait for it to prove it to me by showing me a little evidence and that yeah, okay, it's bouncing off the 618. We're getting some green candles, and the thing's moving back up. Okay, great. Now you can implement your bull strategy on this. It'd be a great time to pick up 100 shares of that and then sell your call against it and just implement your covered call strategy, you know, or whatever other bullish strategy you want to do. A poor man's covered call. You buy a call that's like anywhere from 6 months to a year out. So that kind of like simulates your ownership of the stock. And then you just sell what I talk about regularly in my video. You sell those weekly or calls against that, because now you're covered. That you're not naked. You're not, in terms of you sold a naked call, meaning that the price could go up infinity, and someone can call it from you at that price that you sold it at, and you don't own the stock to give it up. You know, you'd have to go out and buy it, and if it was at $1,000 and you have a call at 145, well, there could be problems. So by doing the poor man's covered call, you don't want to actually buy the stock, or maybe it's a stock that's very, very high price stock that's like, you know, beyond the means of your account to get there. You just buy a leap. That's what it's called officially. You buy that long-term option a year out there, and then you now have a simulated position in that stock. You can call those shares so that if you get called away on the calls that you're selling, right, that you're covered. So with that said, I want to show you a few others. Penn is one that's on my list. This one popped just a few days ago. No, excuse me. Yeah, popped back here. It popped February 12th. So, and it took a nice run, but then it ran into the buzzsaw that everything else is running into. It found support at the 382. That's a good sign right here. However, today it did come crashing through. Now I have an anchored VWAP set on the recent low. I have an anchored VWAP on the high. So this is a battle between buyers and sellers. The buyers are winning off of the low, but if you bought it anywhere near the high, those buyers are losing right now because the sellers are in charge. So there's a couple of reasons. Now, if you'll notice, very faint here, that is the 50%, that line that it's on right now is the 50% Fibonacci number. It found support. So it found support at the 382, and now it's taking a break or finding support at the 50. We'll see if that stays. And then the other thing for support here is this anchored VWAP line, because they have a tendency to offer support. So there's again, just like the other ones, I'm waiting for that reason to show me that, you know, this is something I want to be in, but obviously I don't want to be in when it's falling, because I'm not out there to catch falling knives. Just show me that it's going up, and then you can implement those strategies that we're talking about. All right, enough on that. Let's see. Let's do Reddit. That's on the list. Yeah, Reddit's a 382 retracement right now. It did fall through. It took a pause right here. You notice how it paid respect to this anchored VWAP line? Then it came through it. Then it came down here. You notice how respect to the 382 line, it paid respect right there. It even paid respect. Actually, all three of these days is kind of showing a little bit of respect for the 382. So we'll see if this continues to offer support, and then we get some upside. All right, and then the other one I'm waiting on is Twilio. What do we got going on here? This thing's been on a tear since last August. It was a $55 stock, and now it's 115, but it went as high as what, $151. But all that saying, there were a couple of gaps here on earnings. This was an earnings beat back in October. That was an earnings beat. Most recent earnings was a miss on the earnings side, but a upside, a beat on the revenue. But the market doesn't take much right now to find a reason to cut you. So it gapped down. Notice here again, the gap from here to here is now filled by the gap down and here. So the gap is filled and it's at the 382. And let's zoom in here. And it seems to be paying respect to that 382 line, which coincidentally, the 382 line, which is $115, was resistance here, resistance here, resistance here. It popped, it came down, and off as typical. Prior resistance can turn into future support and vice versa. So this may be something, if I, again, see a couple of green candles, we're into Twillo and doing the covered calls. All right, and then finally, just real quick on the bear side, AMAT, I think is one that I mentioned. I showed you the puts that are available. So AMAT, since July, has just been awful. Applied Materials came down and hit this bottom, had a bounce back, a retracement to the 618 level, and then sank down again. And when I think it came out of TTM squeeze. Yeah, it came out of TTM squeeze right on February 11th. And when it did that and then crossed below this anchored VWAP line from the low, that basically to me was the go sign to take a bear strategy against this. So basically buy a put, do a vertical put spread, however you want to do it. But that's definitely actionable. The other two, First Solar I mentioned. Yeah, here. Same thing, June 2024, and down. So yeah, this is on another wave down. I did set an anchored VWAP. Let's zoom in on this. I did set an anchored VWAP on this recent low on January 28th, and it came out of, I think it was TTM. Yeah, it came out of TTM right there. So it fired on January 22nd, which brought it to my attention because of my screeners. And I've been monitoring it, sideways action, and then finally it did go down below this anchored VWAP. It did get above it again, so that wasn't encouraging to see, but now it definitively is down and moving down. And this absolutely is safe for a bearish strategy. Or in play for bearish strategy. And then finally, the last one is MicroStrategy, MSTR. Yeah, so MicroStrategy, look at that, on a nice run for the longest time here. Went from a $100 stock roughly down over back here in March 2024 up to a 543 at the high. So what a ride. But this is what's going on now. So, and that's been since back in November. So anyhow, I set up the Fibonacci retracement off the high to this low right here. It has retraced to the 382 level and then came back down, which is what you want to see if you're looking for a resumption of a downtrend. I had the anchored VWAP set off the low, and it has come through the anchored VWAP. So sellers are absolutely in control from the low. And today it took another. It just took a beating today. So actually, what did I finish at? Down 11 and almost 11.4% today. on strong volume. So that was a meaningful. Now this last earnings, yeah, it missed earnings, it missed revenue. So in any case, this was of the three that I had on the bear list. This was the third one, and all three are actionable. All right, so that's it for today. If you have any questions or need to reach me, my email is mark@simplicityIW.com. I want to thank you for your interest. I want to thank you for your time in watching this. And please click on subscribe. And remember, keeping things simple is really smart. All right. Have a great night, folks. Take care.